Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and here to give you a quick look at our top stories for the week. The gold price sank to levels not seen since mid-March this week, falling below the $19.35 per ounce mark halfway through the period. U.S. Federal Reserve Chair Jerome Powell was in the spotlight as he testified to the House Financial Services Committee in a semi-annual appearance. During his speech, he said that while inflation has seen some moderation since the middle of last year, it's still a long way from the central bank's 2% target. He noted that most Fed officials believe it will be appropriate to hike interest rates somewhat further by the year's end. The comments from Powell came after last week's Fed meeting, where the central bank left rates flat at 5 to 5.25%. The Fed also updated its dot plot at that time, and the new data suggests that it's likely to raise rates by a further 50 basis points in 2023. In this week's address, Powell said 2 more rate increases, presumably of 25 basis points each, is a pretty good guess if the economy acts as expected. However, he emphasized as usual that the Fed will make decisions on a meeting-by-meeting basis. The Fed's next meeting is scheduled to run from July 25th to 26th. I also want to take some time this week to talk about the uranium market, where the spot price continues to creep toward the $60 per pound level. I heard this week from Finegold of Ocean Wall, and he shared his updated thoughts on the market. Overall, his firm remains highly bullish on uranium, although he reminded investors that headlines sometimes oversell how quickly the sector will move. When asked what category of uranium equities he finds the most exciting, Ben said all of them and pointed to the benefits of having a diversified portfolio. He also addressed the question of how far uranium stocks could run during this cycle. Here's what he said.
Our belief is that when you look back at, let's take Cameco, when you look back at the Cameco 30% move year to date in the context of the entire bull market, so let's fast forward 5 years and let's say that this thesis has come to fruition in the way that we expect. Our belief is that when you look at this 30% move in Cameco, and in the exact same way that stocks were down 30%, at points this year or last year, you look back at that, we think it will be insignificant. We think that the move in uranium stocks, in the uranium price, is going to be it's so highly convex that these moves are not going to play a significant factor necessarily in your portfolios.
I'll leave the link to the full interview with Ben below. I also encourage you to stay tuned for next week, when we'll be posting a discussion with Justin Hune of Uranium Insider. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our report or any article mentioned in this video. We'll see you next time.